Hello, and welcome to the Summit View from Glassy Mountain Advisors. I'm Jordan Smythe, the founder of Glassy Mountain Advisors, and in this condensed version of our quarterly commentary, I'm going to provide a brief overview of our thoughts on the first quarter of 2024 and our market outlook. You can find more details in the latest quarterly view on our blog. The S&P 500 index rose 10.6%, including dividends, during the first quarter, delivering the best start to a year since 2019 and hitting 22 all-time closing highs along the way. This gain occurred despite disappointing performance from Apple and Tesla, two behemoths that helped boost the market in recent years. Small capitalization, industrial, and financial services stocks climbed, an encouraging sign of more widespread market strength. Bond prices suffered as investors tempered their expectations of Fed rate cuts, and the Bloomberg Barclays U.S. Aggregate Bond Index returned negative 0.8%. The U.S. economy remained strong and continued to grow, though at a slower rate. Supply chain issues have mostly healed, consumer spending increased, and the manufacturing sector expanded in March for the first time since September 2022. Businesses continued to hire despite uncertainty regarding interest rates and inflation. The 303,000 jobs added in March trounced forecasts, causing the unemployment rate to dip slightly to 3.8%. Wages increased 4.1% since March 2023, but they rose less than in recent months, a good sign for the Fed as it tries to reduce inflation. The most recent reading of the Personal Consumption Expenditures Price Index, the Fed's preferred measure of inflation, was 2.5% annually, close to the Fed's 2% target rate. Even as inflation hovers close to the Fed's target, circumstances like the recent increases in oil prices due to concerns over the conflict in the Middle East may make the Fed's final push to 2% challenging. We are optimistic that the economy will continue to expand, thanks partly to anticipated Fed rate cuts later this year, and inflation will trend closer to the Fed's 2% target over the coming quarters. We believe stocks should be able to add to their gains as the economic backdrop remains positive and corporate earnings rise. We expect the Fed to lower rates later this year as inflation continues to moderate, though the rate cuts will likely be fewer and later than we expected at the beginning of the year. In addition to inflation, various factors impacting the market and economy include the looming presidential election, the employment situation, the Fed's actions, and corporate earnings, as well as the impact of the conflicts in Ukraine and the Middle East and their potential to spread. The S&P 500 index has pulled back about 4% in April on concerns about delays to rate cuts. Still, the index trades near an all-time high price and at 19.9 times expected earnings for the next 12 months, up slightly from 19.5 times at the end of 2023. This multiple is above historical averages of 19.1 times over the past 5 years and 17.8 times over the past 10 years. Nevertheless, we believe that the prospects of ongoing economic growth, lower interest rates, and increased corporate earnings will provide attractive returns for stocks over the long term. If you'd like more details on our views, go to our blog at GlassyMountainAdvisors.com for our April 2024 quarterly view. Thanks for joining us. Take care.